Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, June 22nd, 5:54 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Late start, corrupted recording on the first one. Let's give it another go. State of the market. We're in an uptrend. You can see over here on the trend gauge, we're flashing bullish for leading stocks since May 18th and across the five major indexes that we track across all three time frames: the short-term 21-day moving average, medium-term 50-day moving average, long-term 200-day moving average. The green arrow meaning that all five indexes are above these levels. Of course, we're aware, or if you've been following us, you're aware of the stop sign that we've put up for the NASDAQ 100 because of how excessively extended it is from its 21 and 50-day moving average. Uh, Risk is high at this point for a rug pull or a severe pullback. We didn't get that today, though. If you can see over here on the what just happened today, led by the big six of the big seven tech stocks, the S&P and NASDAQ 100, undercut and reclaimed their ADMA. Dow, a weekday, just barely finishing negative, but mid and small caps gap down, but held and bounced at their 21-day moving average. Not a very convincing bounce, but a bounce nonetheless. So here are the numbers on the day. RG8, these are our 8 growth ETFs. We create a composite out of them, down an average of 0.22% on the day. S&P 500 closed at the high of the day, up 0.37%. NASDAQ 100 also near the high of the day, up 1.18%. Dow just barely negative, mid caps down 0.55. Russell 2000 small caps down 0.80. Global diversified 60/40 stock and bond down 0.19%. Global stocks flat. Global bonds down almost 0.5% as bond prices pulled back in mass today, meaning yields were a bit higher. In-house GROTECTION up 0.35%, led by Celsius today, up 5.3% on an upgrade. We'll hit the tail of the tape, go through the charts of the RG8 and the 11 sectors that make up the S&P 500 to identify strength and weakness. Let's get right into it. Here's the S&P 500. And you can see after the 3-day pullback, an undercut gap down this morning, but put in the low almost immediately, and a nice close back above the 8 EMA, still mildly extended, 4.4% from the 50-day moving average. Let's move over to the NASDAQ 100. And you can see also 3-day pullback, also gap down, even stronger reclaim of the 8 EMA, up 1.2% on the day. Dow Jones Industrial Average, uh, fourth day of the pullback, although closing basically just where yesterday's close, just below the 34,000 level, holding the 21-day moving average. Mid caps, here's where the two flies in the ointment are. Fourth day now on a pullback for mid caps, but did hold the 21-day moving average. You can see pattern recognition picking up the handle in this cup and handle that they're formatting. Typical that you would see relative strength underperformance in a handle, because by definition, that's what a handle is a consolidation where you go sideways relative to the recent strength that put in the right side of the cup. So bulls will be hoping for a nice breakout of that cup and handle. We'll settle for a strong bounce off the 21 for now. Same situation with small caps, recognizing the cup and handle pulled back, bounced at the 21 today. Let's go to some other tickers here with the VIX. Continued outside down day today. That's right, VIX was higher while stocks were higher today. A little bit of a conundrum there, but they did sell off as stocks strengthened, making a new low, and also reinforcing the contracting volatility in the S&P 500. Today's range about 0.75% as we continue to just create tight days less than 1% with an ATR on the S&P 500. Let's go to the dollar UUP. up 0.36% on the day, inside day between the 50 and the 21-day moving average. If the dollar's up, we would expect precious metals to be lower, and they were. Silver making a new low on this pullback, down 1.5%. Gold GLD ETF down 1%, also a lower low, and GDX gold stocks uh, a lower closing low and a lower low, still above the 200-day moving average, down 0.7%. Bitcoin had been on a multi-day tear. It had a consolidation day today inside yesterday as it puts in the right side of a cup. Let's flip over to bonds now. BND global bonds pulled back down 0.5%. The long bond TLT pulled back more, down 1.2%, failing at the declining 50-day moving average and 200-day moving average. Let's check the yields on the 10-year. You know they're going to be higher, up 2% on the 10-year. On the 30-year, up 1.7% as they continued to consolidate in a fairly tight range. Let's see, RSP. Let's go to the equal weight indexes very quickly. RSP fourth day pullback. Typical that RSP is going to lag the market cap indexes when you see mid caps and small caps down on the day. Let's go to QQEW. Up on the day, but not as much as the market cap weighted index. Let's go to the tail of the tape now. You can pause this. I'll hit the highlights. Some news, jobless claims slightly above expectations. The market reacted slightly positively, pulled back less by the open after that news came out. Powell testified on Capitol Hill for a second day today. He reiterated that the current plan is for two more hikes this year. They just wanted to take a meeting off and let's see how the data settles. So markets initially pulled back on that, but then, as I said, the tech rallied strongly to close the day and finish at the highs for the S&P and the Nasdaq 100. Day count uh, after a 3-day pullback, 1 day up. This is a 14-day rally since the clean breakout on June 2nd. Undercut and reclaim, so day +1 versus the ADMA, 19 above the 21-day moving average. We remain positive as long as the Nasdaq and the S&P are above the 21. Of course, that expectation is muted somewhat by how extended we are above the 50-day, but the QQQ just doesn't really seem to care about that. You can see the strong sectors, weak sectors. What do we do in-house today? Well, with the reclaim of the ADMA, we trimmed some of our SQQQ, still have a small piece of it. And we bought LYV. Let's take a look at this chart, Live Nation. Michael's done a nice deep dive on the fundamentals with this. He likes it a lot. And we took advantage of this pullback to the ADMA and a 60-minute stochastic cross, and also the fact that the 21-day moving average is now about even with this prior breakout level near 85.70. So that should be two levels of support. Should it continue to pull back, if it continues going higher and outperforming, we'll add to it. So that raised our beta to a 1.84. Bottom line on the day, NASDAQ and S&P undercut and reclaim the ADMA. Dow basically flat on the day, mid caps and small caps, weak bounce at the 21-day moving average. We need some strength to come in to mid and small caps to give us some more confidence in this rally. So today, now let's go to the 11 spider sectors and the RG8. We'll start off with basic materials pulling back for 3 days after some strength the prior 2 weeks. XLE Energy, the weakest sector below the 21, the 8, the 50, and the 200, and relative strength even worse than what's being reflected on price. Communication services bounced at the 21 today nicely. Financials lagging on a relative basis and 4 days straight down now, closing below the 21. Financials, some welcome strength in financials would help the S&P 500 and also the mid and small caps. XLI Industrials, after a nice 2-week rally, pulling back for 3 days, consolidating near the ADMA. Tech, as usual, stays the strongest sector, undercut and reclaiming the ADMA. XLP, look how weak this has been during the tech rally. Finally, a bounce and a reclaim of the 200. consolidating for the last 3 days with another bounce off the 200-day moving average. Real estate, the second weakest sector, fourth day down after a failure at the 200-day moving average. Utilities also relatively weak, consolidating for 3 days. XLV trying to reignite itself, some relative strength over the last week and a half, reclaiming the key moving averages. And XLY, this is basically dominated by Tesla and Amazon, both of which had nice days today, undercut and reclaiming the ADMA and near the top of its range. One last look very quickly at the indexes. There's the SPY at the 8. There's the NASDAQ 100 reclaiming the 8. There's the Dow bounced at the 21. Mid cap bounced at the 21. Small cap bounced at the 21. Now to the RG8. IWO, this is the growth half of Russell 2000 small caps, fourth day pullback above the 21. You can see the cup and handle formation forming there. SLYG, this is the growth half of the S&P 600. These are stronger balance sheets. They have to be included in the S&P global indexes. Also a cup and handle, fourth day pullback, holding the 21 EMA. Mid caps, 1 day away from a cup and handle formation. 3-day consolidation above the 21 EMA. IBD 50, nice to see this at the top of its range, because after all, this represents the 50 leading stocks that are in the IBD 50 sector. QQQJ, this is a mid-cap NASDAQ 100, nowhere near as strong as the big boy QQQ, but bouncing at the 21-day nicely today. PDP, a momentum index, consolidating at the 8 EMA, showing some nice strength. High beta stocks, SPHB, they've been kicking SPLV's rear end, now with a fourth day pullback, but still above the 21 EMA. And the Cathie Woods ARK-K bouncing at the 21 after showing some real nice relative strength for the prior 5 weeks, taking a little bit of a break now, bouncing where it needs to be. And that's going to wrap it for the day. As always, love to hear from you. You can email me, don@revereasset.com, or my partner, Dan Stewart, dan@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the market, it's how much of that you can keep. That's why our flagship portfolio is called GROTECTION, to grow assets during market uptrends, protect them during unhealthy markets. That's what we did during the majority of 2022, now taking advantage of the dry powder to participate in the rally. And that's why I say it's not how much you make in the market, it's how much you can keep. So with that, I will wrap up Thursday, June 22nd's edition of the Revere Market Insight video. This is Don Vandenbord telling it like it is. Thanks for listening and have a great day.